how to unlock your dream home with any of these home mortgages available right now. Welcome back, home buyers. Today we are discussing 7 types of home mortgages available right now for home buyers. So different ones. So stay tuned. Welcome, welcome. This is KG. I'm a realtor with Fairfax Realty in Greenbelt. Today we're discussing different type of mortgage that is in the market, especially non-Q mortgage. So today I have one of my lender that is going to discuss the different types of mortgage that's available. So I'm going to ask Marcos to introduce himself. Marcos, go ahead.
Thank you so much, KJ. Hey, everybody. My name is Marcus Seligan. I'm broker owner of Mortgage Experts, and I've been in the business for about 20 years. And we're licensed in Maryland, DC, as well as Virginia. And today we're just going to go over a few of our non-QM loans. Basically, we have bank statement only loans. We have 1-year tax return loans. We have 1099 only loans. Like there's a number of different mortgages that we have. We have a profit and loss loan where we only use your profit and loss statement. We have asset utilization. We have the DSCR as well as the SDCR. We have the VOE program. And we have a numerous amount of bank statement programs, whether it's a 1 month, 6 month, 12 month, or even 2 years. So we have a number of different programs here to offer over at Mortgage Experts.
All right, so Marcos just run down the different programs that they have. So we're just going to take it one at a time. And then the series of videos that we're going to do, we're going to break each one down to see how you can qualify for it. So, but first, before we actually go to the different programs, you do have also traditional mortgages, right?
That is correct. So we have the traditional FHA, we have the traditional conventional VA, USDA, Freddie Mac, as well as Fannie Mae. So yes, we have the traditional loans as well. We also do renovation as well. So if you're looking to do a renovation loan, we have those as well. So we're a one-stop shop here over at Mortgage Experts. So we try to basically have all the loans for you all in under one house so that, you know, we can provide services for you for whatever you need.
Okay. So you are not a mortgage banker, you're a mortgage broker. Tell me the difference.
That is correct. So a mortgage broker deals with or has relationships with multiple lenders across the board that will allow us to shop for you. So the big banks, if you go into a bank and you only are susceptible to those products that that bank offers. Well, with us being a broker, we have relationships with over 300 banks, and we can actually give you products for each of those from each of those banks. So for instance, if one bank doesn't like you or one bank denies you, we might have another bank that will like your file and will do it. Some banks don't do renovation loans. Some other banks do. Some banks don't do commercials. Some other banks do. So it's very important, or it's more lucrative to work with a broker than a major bank because we actually can shop around for you and make sure that we give you the loan that has the best interest rates, the best loan fees, and the best loan programs that fit your needs.
All right, all right. What about credit? Okay, so let's talk about the traditional mortgage, which is your FHA, conventional, and VA. What is the lowest credit score people can get and down payment as well?
Perfect. So FHA goes all the way down to 500 credit score. If you have at least a 10% down payment, we can actually get you in a home with a 500 credit score. I recommend that you have at least a 600 or better so that I could give you a decent interest rate and a decent down payment. But basically, we can go as low as a 500 credit score with FHA. Conventional is typically anywhere from 660 to 680 and above. And VA, we go as low as 560 as well. And again, the higher your credit score, the better the interest rates, the better the fees, the better the points and so forth. So I always encourage my clients to have a great credit score, and we'll help you get there as well. But basically, the better the credit score, the better programs we're able to offer you.
Okay. So, you know, a lot of people fit into that traditional mortgage, like FHA, VA, like you said, but there are some people that don't fit into that traditional mortgage, and that's where you have non-Q mortgage, right?
Exactly.
So what is non-Q mortgage? You know, but that's
so
industry term.
Great question. Great question. So it's actually a non-qualified mortgage. We call it non-QM for short, but what it stands for is a non-qualified mortgage, meaning, in other words, a non-traditional mortgage. So this is mainly for our self-employed borrowers, for our investors, and so forth. They're very limited docs. So we don't ask for tax returns most of the time. We don't ask for W-2s or 1099s, depending on the loan program. But it's very limited doc, and basically, we're able to help people that might not necessarily qualify for the traditional mortgage and get into a non-qualified mortgage. Okay. It does require a higher down payment, and the interest rate is a little bit higher because it's more risk to the lender. However, we are able to help. We've helped many families purchase homes using these products as well.
Okay. And I guess the other thing is, if you get into non-Q mortgage, can you later down the road refinance to traditional mortgage for to reduce your interest rate?
Great question. A lot of my clients that get in, so the non-QM is to basically get you in the door. And once you're in the door, yes, you can refinance into a traditional mortgage after we get our finances or whatever we need to get in order to be able to qualify for a traditional mortgage. So the answer is yes, you will be able to refinance later down the road into a traditional mortgage if you start with the non-QM or a non-qualified mortgage.
Unqualified. Okay, perfect. So we're going to go to the non-qualified. Like I said, we are doing a series of videos, but Marcus is going to go through each of the programs, just kind of give us an highlight so that you know. And then the next video, we're going to break down what you need to qualify for each of them. So let's go with the first one, which is the 1 year self-employed. What is that?
Awesome. So let's say you just started a business, or even if you're a government contractor and your employer just changed you from W-2 to 1099. Technically, if you receive 1099 income, you are technically self-employed. Or let's just say you started a business, you left your job, and you decided to open up your own business, and you've been in business for only 1 year. Traditionally, banks want you to be in business for at least 2 years before they'll give you a loan. So our 1 year self-employed program is for borrowers that have only been in business for 1 year. And it requires a 20% down payment. It requires a 660 credit score. And you could do a purchase, refinance, you could do cash out with this product as well. So it's a great program for people that just started their business or don't have necessarily that 2 year, business under their belt.
Okay, so that's cool. Then the second one is bank statement loan.
Yes. So bank statements. Bank statements is a great product where we actually take your bank statements as income rather than your tax returns or 1099s or W-2s. So all of the deposits that go into your bank account over a course of maybe 1 month, we have a 6-month bank statement program. We have a 12-month bank statement program. We even have a 24-month bank statement program. And what we do is take the average of all of the deposits, depending on the length of program that we use, and we take that and use that as your income. So for instance, if you're depositing over $50,000 a month in your bank statements, then we'll use that $50,000 as income, minus an expense ratio, but we'll actually use all of your deposits and take the average and use that as your income. It's a great program for self-employed borrowers who might not report all their monies to the IRS. And it's a great program for anybody who's self-employed that, has large deposits, but, might not report it on their tax returns. So it's a great program. It requires a 10% down payment, and we can actually lend up to $2 million on this product.
Okay. The next one is 1099 loan. What is 1099 loan?
So great question. So again, this is for the government contractor or even the realtor or whoever gets paid 1099, we'll use your 1099 only as income. So hairstylists, barbers, excuse me, we'll take your 1099 and that's it. We'll use your 1099 as income. We won't ask for your tax returns. We won't ask for anything else. And we'll use your 1099 solely as income. Now, it does require a 20% down payment. And we can actually lend up to $4 million on this product. And it's first-time home buyer friendly, so you can be a first-time home buyer. And we would want you to have or be in your same profession for at least 2 years, in order to qualify for this product. Okay. But it's a great program for 1099 only. And like I said, we only lose your 1099 information as income.
As income. All right. Okay. Ciao. Don't forget, guys, subscribe to the channel.